Let's start off with the S&P, hitting 6,500 for the first time. Is that meaningful? I mean, we've seen a big rally this year, but is that milestone, that number, meaningful?
I think it's meaningful in the context of this backdrop, which is at the beginning of the year, we obviously had a lot of market concerns about tariffs, the slowdown, and yet, equities continue to power to all-time highs. So I think that just shows you the resilience of the equity markets at this point, and also the importance of the AI trade, which has been such a pivotal driver of this rally.
Alastair, don't worry. We're going to talk about the AI trade. I want to talk about what's coming up later today. First, though, PCE. What are your expectations for PCE? How influential do you think it's going to be in the Fed's decision-making process, knowing we have a jobs report coming up just a week later?
Well, I think the inflation report is extremely, key for the Fed's decision here. I think, it's also really important for the equity market. I think one of the trends that we're looking for at this point is if the Fed starts to ease in September, that can actually be a big catalyst for a broader rotation in sector performance. That can actually start to drive the small cap outperformance. That can start to drive some of the cyclical outperformance in the equity markets. So inflation is key. And I think if it does come in lower than expectations, that would be another big catalyst for markets.
What if it just hits 2.9%? That's what Powell forecasted. If it's 2.9, isn't that good enough if you're somebody that's very dovish and expecting a rate cut?
I think it's key not just what the inflation number is, what the employment number is. 2.9% is probably going to be enough for the Fed to cut. But again, I think at this point in time, we're very much data dependent, and it's not just inflation, it's also the jobs numbers as well.
All right, so let's talk about that broadening you just mentioned. We hit it at the top of the show. Consumer discretionary, the best performing sector this month, followed very closely by healthcare. And then yesterday, we got that better than expected GDP report. So I was actually speaking to Joe Mazzola, head of trading over at Schwab. He believes as long as we see continued economic strength, GDP report kind of showed that, we're going to continue to see that broadening in the market. He pointed to about 75% of consumer discretionary stocks trading above their 50-day moving average. Financials, about 80% of those trading above their 50-day moving average. Do you see the same setup? The fact that we're seeing these trends in these two sectors and also economic growth, that investors will continue to feel the confidence to put their money in different parts of the market outside of AI?
Totally. And I think on the consumer sector, we've actually seen a lot of front loading of consumer spending, consumers trying to get ahead of tariffs and start buying more goods. That's clearly positive for earnings in the near term. In addition to that, I actually think these consumer companies, which people were very worried about getting that margin hit, have been able to offset a lot of these tariffs through all kinds of measures. But that has been very important. And then for the financial sector, you also have the steepening of the yield curve. And clearly, that's another big driver of that rotation here. So totally, I definitely think there's a lot of catalyst right now which can get those other sectors, those cyclical sectors specifically, to do well.
You're leading me there. We got to go, but very quickly. Small caps. Are you bullish on them going forward?
I do think I'm neutral, to be honest with you, but I do think the Fed rate cuts are a more positive catalyst. Worth bearing in mind that 50% of small cap debt is floating, so they are one of the most sensitive areas of the market to lower interest rates.